Today's episode of This Week in Startups is brought to you by LeadGenius. Higher quality leads and customized customer data at scale. Schedule a free demo at leadgenius.com. And by Citrix GoToMeeting. Meeting is believing. Visit GoToMeeting.com and click on the Try It Free button to sign up for a 30-day free trial.
Hey everybody, we just finished the Launch Festival 2015 and it was epic. 12,000 people joined us in San Francisco at Fort Mason for 3 days of startups launching and fireside chats. And today's This Week in Startups features perhaps the best fireside chat of the entire event and perhaps the history of the 8 years of Launch Festival. It's with Fred Wilson. You know him. He's the venture capitalist behind Tumblr, Etsy, Kickstarter, Twitter, Zynga, you know all these companies. And he will go down in history as one of the top 10, if not top 5 venture capitalists of all time. And he was so candid. You know, you can tell as an interviewer when somebody's having one of those candid days. This was one of those days. He just let it all out. It's an amazing fireside chat. Like I said, many people told me it was the highlight of the event. I want you to get a paper, pen, take notes, listen to it twice. Don't be afraid to hit the pause key and rewind. You're gonna get a lot of knowledge out of this episode. Let me stop talking. Let's just get to it. Fred Wilson, legendary venture capitalist.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah, money is the root of all evil. What? Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money, and defeat you.
I just love the people who make it through all 3 days. And I love having a packed room. And my next speaker, I've been hoping to get out to the left coast. He's one of my oldest friends in the industry. In fact, I only have one or two friends I've known longer in the internet industry because we were friends right as the internet supported a web browser. Like literally when Mosaic and Netscape came out, I met Fred Wilson. Come on out, Fred, who is, I believe, one of the 5 greatest venture capitalists of all times. Thank you, Fred, for coming.
That's probably not accurate.
I think it is, actually. Let me explain why.
It can't be.
You haven't retired. And you have hit your stride at Union Square. Just go over the top 5 or 10 portfolio companies in terms of performance at Union Square Ventures.
Performance in terms of what?
Yeah, that's a good question. Relevance in society and return on investment, both of those.
Well, relevance in society, probably Twitter, just because, fucking terrorists want to kill the founders of it, so that's pretty relevant.
Yeah, I mean, when ISIS doesn't like your company, you've hit a high watermark. I mean, it's sad and disturbing. I mean, this is credible, is it not?
I don't know. I honestly don't. My daughter texted me yesterday morning, so that's the extent of my knowledge.
Yeah, I mean, it really is fascinating how much Twitter has defined culture, defined the news, defined individuals' presence. How they're viewed in the world is largely what they say on Twitter, is it not?
Well, it is, and I think that's the strength of Twitter. The strength of Twitter is that it's where people go to make news. Now,
you met Twitter back in 2006 or 7? When did...
It was really I got on Twitter in March of 2007. And that's when I started using it, and that's when I started getting excited about it.
Was it SMS only when you got on, or had they launched the website?
I used it via SMS.
Right. And at that time, Evan was picking between venture capital firms.
Mm-hmm. Well, that was really the summer of 2007. Because they'd spent a year inside of Odeo and they were going to spin it out.
Right. Odeo was their podcasting failed attempt. And as Ev always says, he wasn't a podcaster.
Right.
Kind of understand that. But at the time, I won't say exactly who, but you were up against one of the top venture capital firms in the world, probably the top venture capital firm in the world.
We didn't know that, though.
I did, because Evan called me.
I see.
And said, would you go with this firm here on
in Silicon Valley or Fred Wilson.
Wow. So you're the reason I got to invest in Twitter.
No, I was probably 2%, but he did have that phone call with me and said, take me through what you know about Fred, take me through, because that other firm I had been involved with, I won't say their name.
Right.
People are going to fill in the blanks because they spoke here earlier. You beat out the top firm in the country, the world. What was it that made Evan Williams pick Union Square and Fred Wilson over the top firm in the world?
Well, it wasn't a long process. My partner Brad and I flew out to San Francisco and auditioned for the role, if you will, with Jack and Ev. And they asked us a bunch of questions that I think they already knew the answers to, but they wanted to see how we would answer them. And I think we answered them the way that they wanted us to answer them. And they asked us, would you do a bunch of, on-deck distribution deals with mobile handset manufacturers? Would you roll out monetization quickly? Would you, do this? Would you do that? And we were like, no, 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 no. We would just scale the product, keep doing what you're doing, make it more reliable, make it more available, and let the world come to you. And I think that's what they wanted to do. And I think we were probably alone at the time in advocating that approach. And I think that's why they picked us, because they wanted, I think, I don't know for sure, I think they probably wanted an investor who was aligned with the way that they wanted to run their company.
And when you look at that history of you're off the board.
Yep.
You came off the board when it went public.
No, I came off the board 2 years before it went public.
2 years before. And that was voluntarily, or you just thought they wanted to have a different group, or why did you go off the board?
I would say it was somewhat my decision and somewhat their decision, like most exits in life.
And what is it, when does a venture capitalist come off the board of a company like that? Because it is a rocket ship, it is a unicorn. You would have preferred to stay on it, or?
No, I wanted to get off, and I think they wanted me off.
Would you, just unpack a little bit, because there's a lot that's been in the book or something, and yeah.
There was too many investors on the board. There was Peter Fenton from Benchmark, there was myself, and there was Bijan from Spark. And it was time for the company's board to become more, operator-dominated. Jack and Ev were going to stay on the board, and there weren't that many seats to go around, and they needed to bring on people like David Rosenblatt, who's on the board, people like Peter Curry, who's on the board, people like Peter Chernin, who's on the board, and it was the right thing for the company to do. But usually in that situation, when you're in a rocket ship, nobody wants to get off the board. Everybody wants to stay on the board because it's like a position of influence and power. And so I felt like somebody had to do it, and I thought that I was a good candidate to do it. And honestly, I at that point in time spent 4+ years of my life flying back and forth from New York to San Francisco working on the company, and I had gone through a lot, and I was tired.
Yeah, and those other guys could probably use it a little bit more than you. I mean, let's face it, they were up and comers.
No, that's not true.
No?
That's not true. Peter Fenton.
Well, Bijan, yeah.
You say that, when I walked out, you said that I'm one of the 5 best venture capitalists of all time, and that's just not true. There are a lot of people in this business who are as good as me or better than me.
Well, okay, you're in the top 10 certainly, so then when you look across the board, sorry, number 7, whatever. When you look across the board, what do you think is the common quality amongst those 10, or is it just a very diverse group with something unique about each person?
I think that great venture capitalists care more about the company than they do their investment.
Okay, unpack.
You can be an investor and be interested in the financial investment you made. I paid $1 and I'm going to get out 10. Or you can care, is this company becoming great? And those two things are often not the same thing. And I think that great venture capitalists care about the latter, and they believe that the former will take care of itself. So they're not focused on money, they're not focused on how much of the company they own, they're not focused on the financial metrics so much, they're not focused on that stuff, they're focused on strategy, product, management team, building a world-class organization, all those things. And I think that's the common thread that most great investors in the venture business have, because in the venture business, you actually have the ability to impact your investment, whereas if you're a public market investor, you normally don't have that capability.
I love LeadGenius so much, I invested in the company. Then I asked them if I could use the product. We started using the product. Then they started getting clients from me using the product and me tweeting about how awesome it was, and then they decided to sponsor This Week in Startups. How great is my life? I invest in a company, I use the product, they wind up supporting This Week in Startups. It's like, it's all this big flywheel. And why did I invest in LeadGenius? Because the sales process is extremely inefficient at the start. The start of the funnel is when you send that first email, when you qualify a lead, and you don't want to have your top sales executives, the ones who really are the closers, doing all that work. Let's call it menial work. It's like repetitive, menial tasks. I got to go find a contact. I got to send them an introduction email, et cetera, et cetera. I got to clean up the contact in our database, whether you use Salesforce or Tout or whatever you use. All of that is work. And you know what? My sales team for the Launch Festival and for This Week in Startups comes to work every week with new leads and new emails inside their email box and inside the contact management database. They don't have to do all that work. They basically start every day on third base. I'm going to probably cut their commissions based on this, actually. Now that LeadGenius is doing 75% of the work, I'm going to just send LeadGenius 75% of the commissions, and I'm just going to cut. I'm just joking. Right now my sales team is spitting out their coffee. But we did this thing called reactivation. We had like maybe 50 people who weren't calling each salesperson back. What they did was they looked at those 50 people. They found 3 more people in each of those organizations, and they sent them, feeler emails. Hey, the Launch Festival's coming up. We'd love to invite you to come. Here's some background. Here's the companies that have launched. If you're interested in this, let us know. We'd love to have you as a partner. So you're stuck with 50 contacts. You can't get through to the right person. They then expand it to another 150 people, and they send the first email. And then the sales executive comes in, and there's email replies from the clients they were stuck on. It's so genius. That's why they named it LeadGenius. I've explained exactly how it works. I mean, the stuff I'm telling you right here in the text here is super easy. Fewer poor quality leads, more time selling, more revenue, you get that. But it's easier for me to just tell you how it works from my heart, from the desk of the CEO. I love this company. I invested in this company. They are geniuses. Go to leadgenius.com/twist, and they will give you an audit, a critique of your sales process, not just your lead process. They are going to give you a critique of your entire sales organization. If you're a CEO or founder, or you're the VP of sales, there's nothing to lose. leadgenius.com/twist, leadgenius.com/twist. Do it right now. leadgenius.com/twist. Who doesn't need more clients? Okay, let's get back to the amazing episode.
Let's talk about Kickstarter. Yancey was here on Monday.
Right.
Now, Yancey told you when he took your money.
It was Perry, actually.
Oh, Perry told you.
Right.
Perry told you, number one, we're never going to IPO the company.
Right.
So you're like, okay, that takes out my number one way to get a high return for my LPs. And then he added to that, we're also never going to sell it.
But here's my point. That is what I was talking about. Yeah. That's the money side of venture capital.
Right.
It's bullshit. It doesn't matter. What matters is, are Perry and Yancey going to build a great company?
Right.
And if they build a great company, at some point, someone's going to come along and want to buy my position in that company at a great price. And I believe that will happen if they build a great company. If they don't build a great company, it doesn't matter either.
Right. So you just have to look at that big picture.
Right.
He said you didn't actually believe them when they said it.
I didn't believe them.
Right. You just thought, hey, these are...
But I made peace with what they wanted to do and went in with my eyes wide open.
Do you believe them now?
I believe that they do not want to let the company become hostage to any sort of ownership or governance structure that's going to get in the way of what's in the best interests of the company and the creative people who raise capital for their passions on that platform. And so therefore they are going to be true to that above and beyond any financial considerations.
They raised $10 million for the Pebble in under 48
15.
Right, but under 48 hours.
Right.
So now it's at 15. The first Kickstarter did 10 and set the record in 30 days. It's at 15 now after 10 days or so.
Right.
7, 8, 9, 10 days. That means this is going to hit 20. What surprised you or didn't surprise you about Pebble hitting 15 million? Did you expect that? honestly?
No, I didn't. I didn't really focus on it. The thing of it is that everybody pays attention to these gadgets that raise big numbers on Kickstarter. The honest to God truth is that the $520 million last year that people raised on Kickstarter, these big sort of press, driven gadget projects probably represent 10 to 15% of all of that funding, and the vast majority of it is these little $5 to 10, 15, $20,000 projects, of which there are thousands of, and that's really what makes Kickstarter special. People can come into that community and come onto that platform and raise 15 or 20 million, but not many.
Right.
It's the occasional one that hits that kind of jackpot.
When you invested, in your mind, could you see a $10 million Kickstarter or a $1 million Kickstarter?
Yeah, I mean, I thought that the entire movie business was going to move on to Kickstarter. I don't understand why a Quentin Tarantino goes to the studios and takes his money from them and gives them a bunch of equity in his creative project, when he could just go to his fans and raise the capital and keep all the creative control and keep 100% of the equity. I still don't understand why the movie business hasn't moved on to Kickstarter. I don't understand why the games business isn't fully on Kickstarter. I don't understand why the music business isn't fully on Kickstarter. I don't understand why all of these old, antiquated funding studio-type models still exist.
And how did you know that going in? Because most people did not believe this would work. In fact, probably if you asked people, 100 people, 90 would take the opposite position, that you guys were delusional that the film or movie business would go there, $10 million, $20 million would be raised. So what is it as an investor that you're able to see the 10% chance and not get obsessed with the 90% downside chance?
Well, so Bill Gurley one time wrote something that I think is really, really true, which is the only way to make a lot of money is to believe something that everyone else believes is wrong. Because if that turns out to be right. So if you believe something that everyone else believes is wrong and it turns out to be wrong, you're not going to make money. If you believe something that everybody already believes, then you're not going to make money.
It's already been done.
Right, so the only way to make money is to believe something that turns out to be true that nobody else believes.
Right.
And so I think part of what we have to do as venture capitalists is play that game. I happen to be very lucky in the case of Kickstarter. I had been on the board of a nonprofit called Donors Choose for a number of years, which does exactly what Kickstarter does for teachers in public school systems all around the country, and has been doing it since 2000 or 2001. And when Perry walked into my office for the first time, Donors Choose was already raising $30 or $40 million a year with this exact same mechanism. And so I was like, of course this is going to work.
Right. You had inside information. You had seen the future already in this little sort of way. Let's talk about Zynga. Mark Pincus, our mutual friend. In fact, you introduced me to him and became one of my lifelong friends. He had a heck of a ride with Zynga.
Right.
Still a successful company, but a little bit of ups and downs. How do you look back on that arc in Mark's life, that part of the journey?
The thing that always bugged me about Zynga from the day we invested was that it was a games business and a hits business. And, I always felt that, like almost every games business, at some point, the hit game is going to end up people are going to end up moving on from it, and then you have to develop another one. And for a long time, they were able to do that. And then a few years ago, they kind of hit a slump where they couldn't do that. And it's kind of like the New York Knicks.
It's been quite a slump. We're bouncing along the bottom.
Oh, we got rid of everybody.
We still have Melo.
Yeah, but he's benched for the year.
Yeah, no knee. We might hit 20 wins.
Maybe. So Zynga's in a New York Knicks-like slump right now. But, look, one hit game and they could be right back. I still own a bunch of stock because I know that just one good game and they'll be right back on top of their game.
Right. It's like a draft pick or something, or a great trade.
Right.
And all of a sudden,
remember how bad the Knicks were, and then they got Patrick Ewing.
Yeah, and then everything changed.
Right.
Okay, let's talk a little bit about Tumblr.
Right.
And a lot of these companies are taking place in New York. When you and I were running around in the 90s, a lot of the companies had promise, but they didn't actually deliver.
Right.
iVillage, I guess DoubleClick did reasonably well. Razorfish wiped out, but kind of survived, was the only one. But you had so many high flyers, Star Media, another one that you invested in. I'm trying to think of your whole portfolio back then. GeoCities, which you guys got out at a great time and a great price at. What was it about that era that's different than, and how did it inform your investments in that critical 2004 to, let's say, 2009 period, where I think you hit all these companies?
I learned the value of having a really great product. Many of those companies didn't have a really great product. Many of the companies that we invested in the late 90s didn't have great engineering teams, didn't have great product organizations, were, kind of early and, made a splash and got a bunch of users and got public or whatever, got sold. But not a lot of them had really great, sustained product and engineering efforts. And I think I learned how important that was.
And New York today, your thesis was always New York would play a major role. I had that thesis too.
Right.
It actually came to fruition. What was it in the water in that 2004 to 2010 period that you hit Foursquare, Etsy, Tumblr, Kickstarter? Who else am I missing in that class?
There's a bunch, but I think the thing that New York has gotten better at is building the very things that I mentioned before, building really good engineering teams and building really good products and doing a little bit more of the Silicon Valley playbook, which is invest in product and engineering, both in talent and in the product, and continue to innovate there and continue to invest there and not get caught up so much in the monetization piece. Not that monetization isn't important, but you can monetize a shit product and you'll be nowhere, right? Because eventually there'll be no users, right? But if you build a great product and then monetize it, then you can build a really good business. So I think New York kind of figured out how to build tech companies, and it takes a while. And I think it's still figuring it out, and it's still figuring out new tricks. And now we have MongoDB, which is one of our portfolio companies, which is a hardcore database company.
Yeah.
Like more like an Oracle or something like that.
Oracle's nightmare, basically.
Maybe.
Yeah.
But but you wouldn't think that you would build that company in New York, and yet they are building that company in New York. It's the DoubleClick team, right? These are people who scaled DoubleClick. In many ways, DoubleClick was the only really good company that was built in the 90s in New York, and it's the same people who are building MongoDB. So, but we're seeing more people know how to do that now.
Let's talk about Tumblr. You guys were the first investor. Was that a
along
seed investment?
with Spark? Yeah, we both put $300,000 in when David and Marco were basically running a consulting business and had Tumblr as a side project.
So that was probably a $3 or $4 million valuation, I'm guessing.
I think it was exactly a $3 million valuation.
So you turned that position. It sold for $1 billion.
Right.
And you wound up owning 10% of the company. You turned $300,000 into $100 million in that position.
It's more than that. I think we took out more like $200 million because we own more than 10% of the company. But who's counting?
But you kept investing. And one hit like that returns the fund, right? Your funds are typically 250 or something.
Yeah. But I don't want to focus on the money stuff so much. The thing that was great about Tumblr and still is great about Tumblr is it's a great product. And it still is a great product. Even 2 years after Yahoo bought it, it's still a great product, and I still use it every day. I think it is the best blogging product out there. I know they don't think of themselves as a blogging product. They think of themselves a little bit more like a social platform, like a Facebook or something like that. But it is a great product, and it's great on mobile. They made the pivot to mobile well, and they executed it beautifully. And it comes from David. He has that thing that Ev Williams has, and Jack Dorsey has, and Mark Zuckerberg has, and lots of great entrepreneurs have. He just knows how to build a great product, and he has it. He has instincts about it. He knows what to do, and he knows what not to do.
And when they came to you to sell,
right,
to Yahoo for $1 billion,
one. But who's counting?
1 billion.
1.1 billion.
1.1, yes. What was your response? Because you don't need to get the return, obviously.
We thought that it was the right thing for David. They'd gotten out a little ahead of themselves in terms of their burn rate, and the monetization wasn't happening as fast as they wanted to, and there was some big numbers in terms of what it would take to fund that business to profitability, and it wasn't clear that the company was going to be able to raise that money easily, and David owned a shit ton of the company, and we just, look, I really do think that if you focus on what's right for the entrepreneur and what's right for the company, that you're going to do the right thing in the venture business. And Yahoo has been a good steward for that company. They really have. They've left it mostly alone. They learned from the experiences of Flickr and other things where they messed it up. And I think, in hindsight, I think David did the right thing.
And Google, it's sort of like what Google did with YouTube. Like, we know this thing works.
Right.
Let's support it in the ways we can, but not have everybody, as Roelof said yesterday, run over there to try and help and then kill the culture.
Right.
They're trying to maintain the culture there.
Right.
Just think about all the money we spend on meetings, going to them, transportation, the time out of the office, the time to and from. It's an incredible amount of money. And let me tell you something, most meetings can take place over GoToMeeting. Why? Because GoToMeeting has flawless HD. It has flawless screen sharing. The meetings start on time. It works on any platform, mobile, desktop, etc. I love the product. I use the product every day. And here's how it goes when I use it. My chief of staff will tell people, hey, have a great headset. Hey, have multiple people on headsets. Hey, use the voice over IP. It's amazing. Hey, get this 1080p camera or just use the one that comes with your Mac. We've optimized to do these meetings perfectly and on time. And my life is so efficient because of GoToMeeting. I've been using GoToMeeting for a decade. They've been a sponsor and partner on this program for a couple of years, probably 4 out of the 5 or 6 years we've been doing this. Why? Because it's easy for me to read the ad. These other people who read the ad, they may not even use the product the way I use it. I use it daily, 3 or 4 times a day. And I'm looking at the copy. I covered everything. I mean, just go to GoToMeeting today, try it free, gotomeeting.com, you all know that, and get a free 30-day trial. I want you to try it. There is nothing to lose. It's an amazing product. Like I said, I use it all the time. And one of my favorite features, I can always give you the secret features. Hey, you can record the session, which is great to have that recording. Or there's a chat room built into it. So I always tell people, hey, keep the chat room open. So while you're pitching me, I'm going to type the questions. I literally type the questions in the chat room. Why? Because I don't have to interrupt the presenter. I just queue them up. And I say, answer these whenever you want. Think about that. If a person has that question answered later in their presentation to me, I just say, I'm going to put my questions in there. You can answer them at any time. You don't have to answer them in real time. So if I write a question like, how do you plan on making money? They don't have to stop the presentation and say, I'm going to get to that. Please wait. No, they just keep talking. So that's my little hacks. I have these little hacks. And the chat room is one of them. Recording is another. Having multiple people on them at the same time. So I'll be in a conference room with 2 people, both on GoToMeeting, both on headsets, and on the television set on a 3rd computer, so that we have 3 swings at the bat. Multiple people typing, multiple people on perfect clarity. Anyway, the product is fantastic. It's well worth the money. It's very affordable. So everybody thank at Citrix at GoToMeeting for supporting independent media like This Week in Startups. Let's get back to the program. I'm going to talk for 2 hours about GoToMeeting. I love the product.
So have you guys been super active this year? And were you active last year? What is your prognosis? Because I know that you like to be active when the market is on the bottom. Now the market's at the top. There's so many projects, so many Me Too projects. Feels a lot like the Cosmo Urban Fetch days.
We are probably going to make as many investments this year as we made last year, and I think we made as many investments last year as we've ever made. So we are active. We're making a lot of investments. Lately, we've gone very early. So I'd say the last 10 investments we've made, probably 7 of them have been seed, sub-$1 million seed rounds. We think that there's a bunch of stuff that's 5 to 10 years out that's really interesting that we want to be investing ahead of the curve on.
What are those?
Blockchain, Internet of Things, mesh networking.
Why is mesh networking important? I keep hearing people talk about it being important, but then I see Wi-Fi and I see 4G. I wind up getting 20 megabit down on a 4G connection. I'm like, aren't we done?
I'll give you an example. For the Internet of Things to work, you're going to need a different network than we have today. You're going to need a network that is not high bandwidth. is not high cost, but is ubiquitous and cheap and available on a regular basis, but not on a real-time basis, so that these things can communicate and share data with each other and into the cloud. You're going to need a network that's mobile, so that buses and trucks and cars and all that kind of stuff can participate in the Internet of Things. And that's not the network that Verizon and T-Mobile and Sprint are delivering to us, and that's not your home Wi-Fi network. And so mesh networking is a really good answer to that.
Now, you invested in some sort of project to blanket some portion of Manhattan in Wi-Fi.
Veniam.
Explain it. Veniam.
Veniam, V-E-N-I-A-M. This is a super cool company. I don't want to hype it, not trying to hype it. I just think it's really neat.
If you invested, it's cool and you're enthusiastic by default.
Right. Started out in Portugal, in a port town called Porto, in the northern part of Portugal, and they basically convinced, the company came from Porto, they convinced the town to put these 802.11p Wi-Fi access points in all the buses that don't only provision free Wi-Fi to everybody riding in the bus, but also mesh with every car and garbage truck and bus that's driving around the city of Porto. And by putting it on every bus in the city, they lit up an entire mesh of internet connectivity for the entire city. This could be done in any city, and it's really inexpensive to do. And they're going to go live in Barcelona soon. That's probably shouldn't be public. I'm sorry that I made it public, but anyway, I think they will do that. And I think they're going to go live in a couple cities in the United States too.
Now, you meet an entrepreneur from Spain.
Right.
Portugal, sorry. And you hear this crazy idea.
Right.
Most folks who are coming from these kind of places with this kind of crazy idea get dismissed very quickly. It's very easy to dismiss people. Oh, not from Silicon Valley, not from Stanford.
Right.
What is it about what you do that you don't underestimate people? Because I've seen that many times in your career, where people who are awkward, you kind of let them into the circle.
I'll tell you a story. I don't answer every email that I get.
Impossible to do.
But every day, I reply to 20 people. It's my goal. 20 people a day who send me an unsolicited, over-the-transom email that I have never met and don't know and were not referred to me by anybody. I get hundreds of those every day, so I'm not replying to everyone, and it's a random thing. It's not totally random. I look at subject lines and stuff, so every day you have a chance of getting a reply from me.
You just doubled your email, by the way.
That's fine. Because I'm still going to only respond to, so I respond to you and my wife and my kids and my partners. You're first.
First. It's like, Joanne, wait a second. Jason's email, this could be a unicorn.
Right here somewhere.
She's laughing.
And I do that because I believe that there are people out there who are amazing and have amazing ideas who just aren't part of the establishment, and that if I can find them, and it's kind of like Bill Gurley's thing, if you know something that nobody else knows, you're going to make money. If you know somebody nobody else knows, you're going to make money. And Joao, who's the founder of Veniam, he's a really impressive person, and when you meet him, you're like, I want to invest in this person.
What is it when you talk to somebody that you have the check marks go off like, oh my God, Perry, oh my God, Mark Pincus, oh my God, David Karp, oh my God, Veniam's CEO?
Well, you know this as well as anybody. You have to have the hustle. Entrepreneurs have to have the hustle. They have to be able to make things happen. And so you want that. You have to see that in the person. And we get that wrong occasionally, but usually we get that right. And Joao, who's the founder of Veniam, is an academic. But he's got the hustle. And you don't find very many academics who have that. And so that was part of what was impressive to us. We knew he could go out and convince people to believe in what he was selling, because he's got that.
You're spending a little bit of time on the West Coast.
Right.
Explain what your thesis is about the United States, the major cities, investment thesis, centers of greatness?
I think that you can build a great company from many, many places these days. I still think that there will be more great companies built, more great tech companies built in Silicon Valley than any other place. But Silicon Valley has a lot of venture capital, it has a lot of angel money, it has a lot of seed money, it has a lot of talent, it has a lot of companies. It's very competitive here. And it's a lot less competitive in most other parts of the country and in most other parts of the world. And so if we find somebody like Joao in Porto, or Alex and Eric, the founders of SoundCloud in Berlin, or Gabe Weinberg, the founder of DuckDuckGo in Philadelphia, or Ben Milne, the founder of Dwala in Des Moines, Iowa, we don't have any competition for their love and attention. And they want us and they want our money, and they're willing to take it on terms that are fair to both parties. Here, nobody's willing to take money on terms that are fair to both parties. They're willing to take money that's fair to them, but
Right.
not to me.
And how do you have that discussion? You could fall in love with a company and they say, like, listen, we've got 5 people in the company, we have no revenue, and we're 6 months into this, we want a $15 million valuation, we've never done it. What is your response to that team that you say, hey, I would absolutely invest in this at $6 or $7 or $8 million valuation?
I don't even get into the valuation discussion with them. I just say, you know what, I'm not the right investor for you. There are a lot of other people who are better investors than me, and take their money.
Which is not exactly true, because you're amongst the best in the game. So you're basically saying, in a circumspect way, the valuation is not in line with my expectation. But you won't take that conversation on head on. You don't want to grind down
No.
an entrepreneur.
It's an insult.
Yeah.
Saying that I won't pay $15 million for your company says I don't value you. And that's not a good thing to say. I just say, I'm not the right investor for you.
Right.
You
just try to be magnanimous about it.
Right. Because you want to piss them off.
All right, let's look at the big companies for a second here. You have to interface with the big companies on a regular basis, and you see how they're operating. Take me through Google, Facebook, Twitter. How are those companies impacting the future right now, and how do you look at them and their impact on the market? Google first. It's a complicated one to look at.
Well,
So
what people say about Google is that their search business is mature and actually threatened by mobile. It's probably true. But then I look at it and say, but they own one of the 2 mobile operating systems in the world. They own YouTube, which is maybe the most awesome internet service ever. I mean, just amazing.
Could YouTube be bigger than Google search?
Yes. Easy.
Easily, right?
Right.
Television's bigger than search engines.
And they still to this day do data and crunching data and delivering value to me and you and everyone else based on that data better than anybody else. I think that's a core skill set that they do better. There's a few companies that are investing heavily to get as good as they are. Facebook would be first, in mind in that category. But I really like where Google's market position in most of the key markets. Not all, but most of the key markets. I like their focus on software and data, and I think it's a great company. And it's run by its founder, which is always an amazing thing.
Let's go across the street to Facebook then and look at that company. They now have Instagram and WhatsApp.
Right.
They broke out Facebook Messenger. You put all those together, it's basically 85%, 90% of mobile users are using one of those 4 apps.
Right.
They own it all. What's your outlook for that company?
Great company. And they've executed really, really well on both their business and their products and M&A. So you just got to give credit to, they're just doing amazing things over there. It's a great company. They are now in that, tier of super amazing companies.
Okay, now Apple. Now we don't have the
They're
founder.
at the top of that tier, right? They're the most valuable company in the world. I've never loved Apple. That's not a secret. I don't like hardware-based businesses. I don't like their desire to control the user experience and tightly couple hardware to software and not open up APIs and set terms that really aren't friendly to developers in many cases. and end users in many cases. But they just do everything so well that, they keep winning.
Now, what about the watch and the potentiality of a television and a car? Handicap each of those as an investor and the impact it could have on the market.
They're going to make a great watch. They're going to make a great car. They're going to make a great television. They make great stuff.
So you just anticipate those things come out and they hit home runs.
I'm bearish on the watch, not on their watch. I'm bearish on watches because I don't wear one. So this may be my own bias getting to me. I don't want to wear one. And a lot of people I talk to want their watch to be a fashion item. They want it to be jewelry. They want it to be beautiful. And I don't see a lot of people who want to, in my world, that want to wear an Apple Watch. But, that all said, betting against Apple is just a recipe to lose money.
Okay. What about the car? You think they're going to do a car? Or you think they're going to buy Tesla? You think they shouldn't? What's your thought on that?
Why would they buy Tesla if they think they could make a great car? They're on their own.
I guess it would take
Maybe they should have bought
6 or 7 years out of the path to having a car on the road.
They didn't buy Dropbox. They should have bought Dropbox.
They tried. Steve Jobs personally called Drew and tried.
Would have been
heard.
great. It would have been great.
Can you imagine if MobileMe and iCloud was just Dropbox?
It'd be amazing.
They would have.
It's one of those things I wish that would have happened.
It would have taken 4 years of pain out of the Apple ecosystem.
It's still bad. iCloud's still bad.
I still can't figure out iCloud. Where is it? How do I get my files? And then you go in there and you find your files, and you're like, wait, these are half my files. Where are my photos? They're like, oh no, your photos are not in iCloud.
Don't get me started. Don't get me started. This is what I don't love about Apple.
Let's go there.
A lot of this stuff is crap.
Like, how do you put out a calendar app that is that ugly in 2015? Right? You just look at the calendar app.
I don't want to. Let's not go down this rat hole.
Well, but I mean, you ever open the calendar or the mail product?
I don't use any of this shit.
It's horrific. This is my theory. I think that they purposely put out apps like calendar and mail and say, don't add any features, just make it horrible so that you have like something when you open your phone, but then it allows the ecosystem in the App Store to bloom.
Well, maybe. I mean, like Sunrise. How awesome is Sunrise?
It's the
and
greatest.
How shitty is Apple's calendar?
That's my point. If they made that calendar, if they were a fast follower and they took all those features like Google did with, copying mailbox, then it would crush the souls of. Maybe
that's what they're doing. If that's what they're doing, more power to them. I like them better now.
You can't. How could such a smart group of people who are so good at design do software so bad?
Well, every company has its strengths and its weaknesses. It's like every person.
Yeah.
Right? And so that's I think how they are. That's how they're sort of wired up.
When you look at yourself and you look at your career now, what do you think your strength is? And has it changed?
Yeah. I think I've become softer and more zen over the years, which I think is a good thing. I think my strength is that I am a consensus builder, and I try to do the right thing, and I consider all the stakeholders, and I really want to make it work for everybody. My weakness is I'm not probably as principled as I should be. It's just they're mirror images of each other. My partner Brad's very principled. He's always like, well, what's the right answer? It's like, yeah, but we're never going to get to the right answer, Brad, because the world's not going to get there,
Right.
Like on net neutrality, for example, we were very out in front and center on that issue and spent a lot of our personal capital and actually real financial capital on that issue. And Brad wanted Title II regulation of the last mile of the internet. And he thought that was the right answer. And I said, Brad, why do we need that? Can't we get somewhere close? And he's like, Fred, that's the right answer. That's what we got to hold out for. I was like, why can't we cut a deal? Like, let's just make a deal. And he's like, no, that's the right answer. We got there. We got the right answer.
So you might have accepted a little bit of a.
I'm always that way. I'm always willing to compromise.
What are your weaknesses? And
that is a weakness.
That is a weakness in a way, yeah. Well, yeah, like you said, two sides of the coin. What about your first, sort of
It's like Netanyahu. Netanyahu does not want to negotiate with the Iranians on the nuclear issue at all.
Right.
And Obama's like, we're going to find some happy medium where we get, a lot of what we need. And that's just two different attitudes, right? It's almost like, how your mind works, right? And so I'm more in the Obama world than the Netanyahu world.
Interesting. And so let's talk about the first half of your career. When you look back on it, where were you, when you look back on it, you go, oh God, I wish I was different in my youth. You know, we all have our wishes and go back in time. And what do you think made you the way you were in that first half of your career?
Well, the first half of my career, I was very financially motivated, very analytical. I'm good with numbers, and I'm good at kind of putting pieces together and understanding things. But I didn't understand the people side of the business, and I just happened to get very lucky that I got to partner with Jerry Colonna at Flatiron, and Jerry is the exact opposite. He's a people person. Couldn't give a shit about the numbers, not terribly analytical, but really interested in people, and entrepreneurs love working with him. And you know, he told me things like, great companies hire from within. And I said, well, why is that, Jerry? And he said, well, if you're always getting, if every time there's an opening above you and the company hires somebody in to take that position, you have no growth. You have no, and so you end up leaving, and so the talented people. Whereas if you build from within, you know, these people could become owners of the culture, and you know, and I was like, okay, that makes sense. I never understood that, but now I understand that. He taught me that, many things like that. And so then that was great. And then Brad taught me how to think about markets and how to be very disciplined in our investment strategy and how to stick to what we know. I also learned tremendous amount from my wife, Joanne, and my children. Children teach you so much.
Tell me about it. 5 years into that journey, what did you learn from your kids?
How to be patient, how to be supportive and critical at the same time, how to be there.
What's the answer to that question, by the way?
You start with the good news.
Start with the good. Start with good. Got it.
And then you drop in a couple of hints about the stuff that needs to be worked on.
This is great design.
You don't do like, you know, my dad, I'd come home with a 98 on a test and he'd say, what'd you get wrong? You don't do that.
Right.
You're like, wow, that's amazing.
98, incredible.
I was like, by the way, was you know, I mean, was there something that, you know, you could have gotten right that you didn't get right or something? You know, like you could
There's a way to say it.
You can get to that answer, but you don't start with like, well, what'd you get wrong? Or why didn't you get something wrong?
You could be like, what horribly worded question did they trick you on?
Exactly. What was the trick question you didn't get right?
Yeah, what question did the teacher form in the wrong way?
There you go.
That made you mess up.
It's so much about what you say. My partner Albert, you know, had to learn this. He's German, and he
you don't have to
would say
explain.
to entrepreneurs, well, you need to do this.
Oh.
And I'd say, Albert, no. You're right. They need to do that.
Yeah.
But they'll never do that if you say that.
Right.
I said, you should say to them, well, wait, have we thought about maybe trying this? And what was the thought process around that?
Right.
It's like you're asking the same question, but it's just all in how you say it.
Yeah. What's the next? You're not an old man by any stretch of the imagination. You could have retired after the first fund. You could have retired at the second, third, fourth, etc. You're still in the game. To me, you seem more engaged than ever. You still blog every day or every other
day.
I mean, how did that change? I think that was the key move, was it not?
Yeah.
Explain how blogging made you the highest profile blogger.
Well,
highest profile VC.
I mean, we could spend all the time that we have on this, but what I would say about blogging is that it forces me to articulate what I'm thinking in a way that's coherent. And that is hard to do and incredibly valuable to do. I wrote a post last week about building enterprise networks from the top down as opposed to the bottom up. This is something I'd been stewing on for a long time and noticing in a bunch of our portfolio companies, something that was working really well for them, but I'd never been able to just articulate it in a way that was easy for people to read and understand. And by doing that, I now understand it. And when an entrepreneur comes in who's doing that, I see it more quickly and I can jump on it more quickly. And that thing is probably the most valuable thing of all that comes from blogging. It's the discipline, the mental work that I do every single day to benefit me. And the public part of it is, it's got to be good because I'm putting it out there. So it makes me work harder. And then also everybody else benefits on it. And then occasionally I can convince people of things. Like the word freemium got invented on the ABC blog. I didn't come up with it. But I wrote this blog post about 7 or 8, maybe 9 years ago now, that I'm seeing more of these entrepreneurs walking in with this business model where you give something away on the internet because it doesn't cost anything to give software away on the internet. And then they have a premium version of it that they use to monetize the business. And I said, I love this business model, but there's not a good name for it. And like 50 comments down, this guy, Jared Lucan, writes, we should call it freemium. And the minute I saw that, I was like, fuck, that's the name. We're going to call it freemium. Yeah. And the next day I wrote a blog post and I said, freemium. And this is what freemium is. And now that word's used everywhere, right? And so that's it. So we, me and everybody who participates in the community at ABC created the name freemium. And that's great. That's great for everybody. Now we have something that we can use in the language to talk about a business model.
When you started as a blogger, though, no VC would blog.
No, that's not true. David Hornick was blogging.
Okay, so there's one other one.
Who?
Had Brad Felt started?
No, Brad, I think, came after me.
Yeah, but nobody's counting the time here. But I mean, it was.
I count that.
Exactly. This was considered a dangerous concept because the venture capital business was a very closed, secretive business.
Right.
Blogging made it not so closed and secretive. How did you make that determination? And were there times when you blogged something that you were like, had a portfolio company get a little pissed off?
I made that mistake a couple times early on and learned from it. And I haven't done anything like that in probably 10 years. You have to be very, very careful. I mean,
that what, you don't speak for the company, or?
Yes, and that you don't reveal confidential information that you shouldn't, or speak publicly about somebody when they don't want you to. I mean, it's all these things that you have to be careful about. And I'm sure there's a lot of entrepreneurs who never walked into my office because they were scared to death that I would blog about what they were doing. They didn't want me to do that. So
do you give a disclaimer when they come into the meeting, like, this won't be on my blog, it's a private meeting? Or do
no, but people bring it up. People bring it up.
And you say, of course I wouldn't. This is a private investment meeting.
Right. But people bring it up. And the very fact that people bring it up means that lots more people are thinking that don't bring it up.
Right.
But I think that my behavior now over the years, hopefully most people aren't worried about that, but I'm sure some people are still worried about it.
So the next 10, 20 years for you, you're going to retire? Are you going to angel invest? You sort of did this blog post, you like angel investing, you watched Joanne doing angel investing and getting a little jealous.
Yeah, I am jealous.
Why?
Joanne's made 80 angel investments.
She having more fun?
She could do it in her pajamas. She doesn't, but she could. And it's
pajama
cool.
factor.
It's pretty cool.
It's pretty cool.
And I like that. But I also really, really love my partners and the platform we've built at Union Square Ventures. So, I guess maybe I'll just continue to be jealous.
So you'll keep going at Union Square, but Union Square is dipping down into angel investing again.
Seed,
I mean, yeah. Right. Not angel. What's the difference there? 250,
angel
500?
No. Angel is, I think, when a person makes the investment, and seeds when an institution makes the investment.
Okay, that makes sense. Now that's interesting that you're going down in valuation and in dollar size. And like Andreessen Horowitz said publicly, we're not doing A rounds. We don't want to make the wrong bet. We want to do the B round and overpay on the winner.
Look,
what's happening there? Why would you have two different approaches?
There's no right way to do the investment business.
Okay.
People need to do what they're good at and what they like doing and what they're comfortable doing. And we just like having small amounts of money. We shrunk our fund sizes over the years.
But Andreessen Horowitz has gone doubling every year or something.
Yeah, but that doesn't mean they're making a mistake.
Right.
I'm just saying that...
Or are you making the mistake? Or is
no.
you need to have both players in the market?
No. People should do what they want to do. We don't want to raise a lot of money. We don't want to invest a lot of money.
You
don't
could.
want... What?
You could.
Yeah, but we don't want to. Right? And if we find ourselves doing something we don't want to do, we're going to be unhappy and we're going to be bad at it.
Got it.
And they want to. And they're good at it. So they should do that and we should do what we do and everybody, should do what they should do.
And is that a sign of a bubble? Is it getting too frothy right now with these huge valuations? And how do you look at it? You've been through 3 or 4 of these bubbles. We've both been through them. What does your spidey sense tell you? Because I don't have it tingling like I used to, which I'm kind of nervous about the fact that I'm not nervous. Are you nervous or not nervous?
I'm not nervous.
Are you nervous that you're not nervous?
No. I'm not nervous because I don't feel that I personally, Joanna and I personally, or Union Square Ventures is terribly exposed, and therefore I'm not nervous. But I think that there are a bunch of things that don't make any sense, one of which is that the private markets will give you a higher valuation than the public markets. That doesn't make any sense to me.
Why is that the case?
Because the private markets allow you to run a auction that you have to win with a price. In the public markets, stocks go up and down, and it's not this sort of highly constrained process where everybody's bidding against each other to get into the deal, and then you're locked up.
Yeah.
Right? So that model allows you to go out and push a valuation well beyond where it could actually trade in the public markets.
And that's dangerous. That happened to Zynga, right? They went out at the same price as the private price, I think, or similar.
Yeah. I mean, there's been a lot of companies that have had a difficult time going public because they did private rounds that were frankly higher than what the public markets really wanted to pay.
What else makes you nervous or spidey sense?
It makes me nervous that we cannot find an investment in the Series A or B or C that is priced at a level that we really think is the right price. That makes me nervous.
Yeah, that is kind of nerve-wracking. And what factor are they off typically, based on what the actual price and the get it now price, as it were?
We had one company that raised money at 3 times the price we thought was the right price. Most of the time, it's 50% higher. Sometimes it's double.
Wow. And when the entrepreneur says to you, it doesn't matter if we become a unicorn, it doesn't matter, what's your response?
Matters to me.
Yeah. It does matter, right? Yeah.
Well, it matters to me.
Yeah.
So, but we're still making investments. I mean, we're still finding places to put money.
Right.
And so, I don't know if it's a bubble or not. What I do know is that it's harder to make money in the venture business given the valuation environment that exists today. It was a lot easier 5 or 10 years ago. That I can tell you for sure.
And are you reducing your exposure to the public markets, moving more into cash, moving out of the public markets?
Joanna and I don't own any public stocks that we didn't get from Union Square Ventures or Flatiron Partners.
Wow. Only portfolio.
But that's been the case for a long, long time.
Right.
I mean, I just don't have time to pay attention to the public markets, and I don't want to put money with other people, and I don't want to put money with, hedge funds or anything like that. So we have our money in cash, in venture capital, and in real estate, and in public stocks that are companies that we helped build.
What's the entrepreneur alive today that you think is absolutely at the top of the game? Or maybe you have 2 or 3, but just a singular best entrepreneur on the planet. I'm using the word entrepreneur, not CEO.
Well,
and why?
Maybe Elon Musk, just because he's so fertile, right? You could say Mark Zuckerberg, but Mark Zuckerberg's Facebook is his thing, right? And it's one company. Or Larry, but it's one company. Or Bezos, but it's one company. And the thing that's interesting about Elon Musk is it seems like, he could start 3 or 4 more companies. It just seems like he's got that kind of serial entrepreneur DNA, and he's building some really awesome companies. So,
you think the Hyperloop will happen?
No, I don't know. I mean, you asked me the question, I give you, an answer.
Right.
And I know he's a friend of yours too.
Friendly, yeah. I happen to agree. All right, let's hear it for Fred Wilson. Amazing job. Well done.